All right, thank you guys. Sorry, I know the cookies had distracted everybody and we took a little bit longer of a break than we anticipated, but I just wanted to introduce Courtney Finn. She's our Director of Controls and Accountability. And she's going to go through some really great information here on financial management and controls. And then Mike Keener, who's our manager of AP, is going to share some travel and entertainment tips and tricks and best practices at the end of this that kind of go along with financial controls and management. So take it away, Courtney.
Thank you. Can you guys hear me okay? Welcome. Good afternoon. The last formal session of the day, so hopefully you're soaking in a lot of good information. So this is going to be tricky. I have to keep the mic right under me. So today we're going to talk about internal controls, what they are, why they're important. We're also going to talk about fiscal officer responsibilities and some resources. I know we've touched on them a little bit today, but I'm going to talk about them again. We'll do an overview of the ledger review system. Talk a little bit about internal and external audits and also where to get help. And then AP will give us some information about travel and entertainment best practices. Okay, so this is going to be tricky. Internal controls are important for integrity of financial information. They are also critical for fraud risk management. I don't know if this is going to work. Move it. Or I could just switch. I was trying to be fancy. I'm an accountant, not an IT person. Is that better? That's better. Maybe. Okay. So this is also a critical piece of fraud risk management. This slide is giving you some recent fraud statistics. But as you read those, what I want to tell you about is a fraud that happened here at UC Davis recently. So there was a situation recently where a separated employee was able to get affiliate sponsorship, and over the course of many months, they spent over $250,000 on airfare. That airfare was directly billed to the department's account through our central travel system, or CTS, and the traveler didn't reconcile the expenses in Aggie Travel, and the department didn't identify the charges as unusual for over a year, and so the result of that is we lost almost all of those expenses. So fraud is happening here at UC Davis, and there are real financial impacts to it, but departments that have effective controls can reduce the risk of those errors or fraud occurring. So let's talk about internal controls. So what are internal controls? Internal controls are processes that are put in place to help provide assurance that the university can achieve its mission by focusing on effective and efficiency of operations, reliability of financial reporting, and compliance with applicable laws and regulations. So the most important thing to know about internal controls is it's found in every part of the university's operations, and it really is the responsibility of everybody, not just leadership, everybody. So internal controls are generally grouped into 5 interrelated components: the control environment, risk assessment, control activities, information and communication, and monitoring. And each of these 5 components work together to create the the system that's supposed to be preventing and detecting the risk of error or fraud. What we're going to talk about mostly today is control activities. Control activities are the specific policies and procedures that you put in place at the university level, but also at your department level, to help you achieve your goals, report reliably, meet your compliance regulations, and to protect the university's resources. So we kind of talked broadly about what internal controls are, but now I want to apply those more at the department level. Like, what does that really mean for me and my department? So this slide and the next slide are going to cover some, we call them key internal control practices, and they're really something that you should make sure are in place at your department. So the first one is separation of duties. This is probably the most important one. What separation of duties is that it's dividing the responsibilities between different people so one individual doesn't control all aspects of a transaction. So it really means that one person's work is a complementary check on another person's work. And when you have at least two people involved in every transaction, you're going to reduce your risk that someone made a mistake or that someone is misusing the system. The Kowali financial system that we use is helping to enforce separation of duties. It makes sure that all transactions have a different initiator and approver. So, for example, if you are a fiscal officer and you initiate a transaction, normally transactions route to the fiscal officer for approval, but if you initiate a transaction as the fiscal officer, that transaction is now going to route to your delegate for approval. So we'll talk about that a little bit later too, but it's really important to have delegates on your accounts so that those transactions don't get stuck because they don't have anywhere to route to for approval. The next one up there is authorization and approvals. So this is making sure that transactions are approved by someone that has the appropriate delegated approval authority. If you're not sure what that is, we have PPM 330-10, which kind of describes in detail the appropriate approvals for department transactions. Another important piece of this control is that if you are the person that's doing the approving, it's important to make sure you understand your department's mission, what your financial and administrative operations are for your specific unit. And if you don't understand a transaction, ask questions. It's really your responsibility as the approver to make sure that you understand what you're approving. And if you don't, make sure you're asking questions. The next one on here is security of assets. So this is your equipment, your inventory, like your supplies, cash, and any other university resources your department might have. We want to make sure that they're secured physically. The other piece of this is that we should be periodically counting those assets and making sure that what we count agrees to what we have recorded in our financial system. And the last one up here is review and reconciliation. We'll talk a lot more about this throughout the presentation, but the idea is that all the records are routinely reviewed and reconciled. And that should be by someone other than the person that prepared or processed that transaction. So the separation of duties idea, you always have more than one person looking at a transaction. A critical piece of this is that it's done timely. That's the best way to identify errors or issues and resolve them quickly. And we have the ledger review tool that we require for review and reconciliation, and we'll talk more about that as well. So just a couple more, and hopefully none of these are things you haven't heard about before. Just want to emphasize their importance. So training. It's important that employees have the appropriate guidance and knowledge to carry out their job responsibilities. And it's also important that we provide the appropriate level of supervision so they have someone to go to ask questions. The university has the LMS, or the Learning Management System. There are hundreds. I tried to quantify it. There are hundreds of trainings in there. They're online. They also do a handful, a whole bunch of in-person trainings. So if you haven't checked out all the resources that are in the Learning Management System, I really encourage you to look at what's in there, all sorts of topics. The next one is documenting policies and procedures. This is just making sure that the university has documented policies and procedures, but you should also be doing that within your own departments. It's important that those policies and procedures get formalized, that they get documented, and that they get communicated. It's great if you write it all down, but make sure somebody knows where it is. And part of this is important so that people know what their day-to-day responsibilities and processes are, but it's also important for continuity. If someone is absent for a prolonged period of time, or as we have retirements and separations, it helps transition that into the new team and keep that continuity. And the last one, hopefully, is very obvious, but password protection. Everyone has their own unique ID and password, and that's how our financial system identifies you, and that's how it knows how to route documents, what roles you've been assigned, and if we give those passwords and sign-in credentials to someone else, you're putting yourself at risk, you're putting the university at risk because it's not following the process that was put in place for you and your role. Okay, we haven't done one of these in a while, but I do have one. So I think, are you listed as the fiscal officer of at least one KFS account? Quality account. So at least half of us, more than half of us. Looks like it's right around 60%. Okay, that's good. Oops. So the next thing I was going to talk about is fiscal officer responsibilities. We've talked about department controls, so now we'll talk briefly about fiscal officers and their responsibilities and resources. So the fiscal officer oversees all aspects of a Kuali or KFS account that Jim was presenting about earlier. And that means that you understand how to use the appropriate account attributes that Jim was talking about, like object codes and funds, as well as making sure that those funds are used appropriately when you're approving those transactions. It's important that fiscal officers know our accounting, university accounting. It's important you complete your ledger review on time. And if you have contract or grant funds and you're a fiscal officer of those awards, it's also important that you understand the purpose of those awards and that the awards are being used according to the rules on those awards. In the finance department, we're also doing our own checks on the appropriate use of funds. We check general state funds is one that we're checking to make sure that people are using those appropriately. We're also running some compliance checks on the ledger review and reaching out to management and leadership on the results of those. So Laura and Sarah talked a little bit already about this, but I just wanted to point out our new website. So update your bookmark. It should be financeandbusiness.ucdavis.edu. One thing that I think we kind of already touched on this a little bit earlier, but that I wanted to make sure you took away from today's presentation was how much is on this website. There is so many resources on here, so take the time to poke around and look at the different sections. And I can always navigate through this if anybody wants to know where things are at, especially now that it's been changed around, hopefully for the better. What I want to point out specifically is the I was supposed to click that so you have the address. There's a section on here called Fiscal Officer Resources. I think Jim mentioned this. There is a lot of great information in this section if you're a fiscal officer. There's stuff about accounts, funds, UC accounts. We're also adding a lot of new stuff to this. We've got an object code dictionary we're hoping to post in the next couple weeks. And we're also working on a fiscal officer training that will hopefully get posted up here really soon. So make sure you check that out. That's a good resource. So one thing I wanted to touch on is an important area for the fiscal officers to be aware of are the transactions that we call high risk. We have a good section on our website that talks about this in detail, but I'll just talk about a couple of them briefly. The first one is transactions that are generated outside of KFS. So these are transactions that will feed right into the ledger. They're not, these feed documents aren't going through the normal routing process in KFS. These are like the department recharges that get posted on the GLIB documents. The other one is CTS, which we talked about as part of the fraud. So these are important to pay careful attention to because they're posting right to your ledgers. So you want to make sure that you're looking at those and that they're what you expect and that they're appropriate, they went to the right account. And to keep talking about travel and entertainment, Mike's going to talk about this when accounts payable does their presentation, but travel and entertainment is probably the highest risk area. What I want to point out, and Mike's going to cover it, but what I want to emphasize is there are two reports out there that are especially helpful for travel, the 418 and the 421. These are the unreconciled Aggie travel expense reports. These are really critical tools for your department to make sure you have a process where you're reviewing these reports and clearing these expenses timely to make sure that they're appropriate. In the central office, we're also working right now on implementing some new processes to review the travel and entertainment expenses as well. So other high risk are employee reimbursements. If you see an employee reimbursement, they should be few and far between because they have likely been processed outside of our approved purchasing processes like Aggie Buy or P-cards or KFS requisitions. Supply Chain website has lots of great information on how to buy and how to pay. So hopefully employee reimbursements should be infrequent. If your department's using gift cards, it's just very important that you know the policy around gift cards. And that the other thing about gift cards is we really should be treating them like cash. You should make sure that they're secured and you should make sure that you have a track or a log of them. And the last one on there is P-card transactions. Just what I wanted to highlight on P-card transactions is make sure that your department has somebody other than the card holder as the person that's verifying that all those purchases were received and that they were properly accounted for. Okay, so just a couple more best practices for fiscal officers. I know this one's easier said than done, but it's important that for the managers that you're aware of your staff's workload. We increase the risk of error or fraud when we get overloaded with our responsibilities. And I think that's when it gets really easy to be tempted to cut corners or to not perform our processes and our review as thoroughly as we would have. So that's something to be mindful of. I mentioned it earlier, it's very important that you make sure that all your accounts have an active fiscal officer, and also that all those accounts have a delegate. We have a really nice write-up on our website about delegates and how to assign them. So check that out if you need information on delegates. And then I keep mentioning this one too, but it's important, just reviewing your accounts and your reconciliations timely, or as close to when the transactions occur as possible. It's much easier to solve any issues that come up. So I guess this is my plug to say, don't wait till fiscal close to reconcile your accounts. Do them every month and timely so that fiscal close is much smoother. So now we can talk for a few minutes about the ledger review. So the university receives funds from all different sources, and our responsibility is to demonstrate that we are using those funds appropriately. And the ledger review is a tool that is required to help with that, and it's also to make sure that our financial information is reporting accurately. Ledger review is governed by PPM 330.11, and it's a tool to make sure that your department ledger transactions, that you've reviewed your transactions and you're providing assurance that those transactions are appropriate and in compliance. That's the certification that you're doing at the end of the review. It's broken up into 3 components: the ALR, the MLR, and the QLR. And so we'll look briefly at each of those pieces. Okay, the ALR. So this is the Analytical Ledger Review. It's completed monthly by fiscal officers, and it is DS Report 403. The ALR is an analytical review of the ledger rather than like a line-by-line, transaction-by-transaction review. It's going to show your budget to actual comparisons. It's also going to do month-to-month comparisons, and it groups things by revenue and expense categories. It's also got sections in there to highlight the feeds that we talked about that were a little higher, that are higher risk, as well as high-risk transactions. It also groups high-value transactions. The ALR is required for any account, any KFS account that has activity during that period, and it also requires you to review any account that is in overdraft, whether it's had activity in that period or not. And then there's a button at the bottom once you've completed your review that you click to certify that you have completed the review and that things are appropriate and in compliance. So if you are someone that does the ALR, it's important that you understand the purpose and the restrictions of the accounts that you're reviewing. It's important to make sure that those expenditures were allowable, that they were within UC Davis policies and UCOP policies, and also that any federal or state regulations, they were within, they are compliant with those as well. And it's important to do it timely in case you identify things that are not, that need to be corrected. So the next piece is the MLR, or the Management Ledger Review. This is also completed monthly. by the MSO, CAO, or manager that's listed on those orgs. This is DS Report 404. It's a little bit different from the ALR in that it's providing a summary level view. You also have the ability to search by some other attributes like fund. The MLR is going to show any accounts that are in overdraft. It's going to highlight high value transactions. It's also going to give you it's going to indicate whether the ALRs have been reviewed or not reviewed, so you can see the status of those. And the next piece of the ledger review is the QLR, or the quarterly ledger review. This one is done quarterly at the Dean and Vice Chancellor's office. It's DS Report 405. It's very similar to the MLR, but it's done at the school or college or Vice Chancellor level. It's really serving as a check on the MLR and the ALR to make sure that those were reviewed appropriately and that the Dean's office is taking a look at the accounts as well. So a couple things to wrap up ledger review. If you manage contracts and grants, we recommend that you set the contract and grant history balance to include. That way, if you want to compare your ledger review to like your DS2 transaction report, they will agree. Jim mentioned the FIS 50, so I won't go into too much detail on that, but if you run the FIS 50, the org structure report, and especially if you do it at your top level org, you'll see your whole tree, and it will have the person listed that should be completing the QLR and the MLR if you need to know who those people are. There's an email. We're so kind in that we send you an email notification whenever the fiscal period closes that says, hey, the fiscal period's closed. It's time for you to do your ALR and your MLR. And we also send another email notification if the ledger review is 60 days overdue. There's also a DS report, if you didn't know, DS 420, that you can run that will also list all of the ledger reviews and the status if they're overdue, so you can check that as well. A couple things to talk about that are coming soon, hopefully in the next few weeks. There's going to be a new section added to the MLR for unreconciled travel. This is those DS 418 and 421 reports I mentioned. There'll be a section at the very bottom of the ledger review that you can click on that will take you to those reports so that you have a quick link to get to those critical unreconciled transaction reports. And the other thing is we're in the process of updating all of the ledger review trainings. So those should be posted very soon, so check those out. So if you've been doing everything we've been talking about, you should be set up for a very smooth, easy fiscal close. And the final piece is the annual fiscal certification. The purpose of the certification is it gives university leadership comfort in signing the management rep letter, which is a requirement for the annual financial statement audit. It's a series of certifications that you're signing. I'm not going to go into detail what the certifications are. What I really want to talk about are the resources we have. Again, out on our website, under the fiscal close section, there's a certification checklist. And then there's a certification guide. And so the guide is going to explain what each of those certifications are, and then it's going to tie it to the checklist and like specific steps that your department should be doing that should make you feel comfortable signing that certification. So it kind of links it all together. And then there's also a really good FAQ section for the fiscal certifications also. So check that out. Okay, last section is about audits. So an audit is a review that's performed in order to provide an independent assessment. They can be internal or external, and there's a whole bunch of different types. There's financial audits, which are really reviewing the financial records for accuracy and completeness. There are operational audits, and the goal of those is to provide suggestions for improvements to your operations or processes. There are compliance audits, which are pretty self-explanatory. Make sure you're compliant with laws and regulations. And IT audits are really focused on security and access and data integrity. Okay, so a question. I don't have it. I can't read it very well. You receive a notice for an audit. What do? A, order do not disturb sign for your door. B, ignore the auditors. An audit notice is like a subpoena. Unless it's handed to you in person, the auditors can't begin their work. C, fill up a U-Haul truck with all the documents you think the auditors might want and send it off to them. Or hopefully you all say D, contact your dean's office in management and audit and management advisory services. I can't. No, not all of the above. Start with D and they will help you navigate through the rest of them. I can't take credit for this slide. I borrowed it from internal audit, but I liked it, so. So let's talk a little bit about internal audit. At UC Davis, internal audits are performed by Audit and Management Advisory Services. They support the mission of UC Davis by partnering with management to provide independent and objective assessments. And their services are really designed to add value and to help improve our operations. They also have an external audit coordinator, and they're available to support your department if you get contacted by an external sponsor audit. They will help to provide guidance and oversight as you go through that process. And then we have external audits, which are auditors that come in from outside the organization to look at our financial records and processes and provide an opinion. At UC Davis, we do participate in several different external audits every year. The financial statement audit is a big one, at least in my department. This audit is managed centrally by finance, but it is important that you have the supporting documentation in your department. So if the auditors were to select one of your transactions, you have that available for us. And also that you're available to help us answer questions if the auditors have questions. The state of California is another external auditor that we all, I think, know well. And the last one is contract and grant sponsor audits. So this is like the uniform guidance audit. And I already mentioned it, but if you are contacted in your department by a sponsor for an audit or a review, I encourage you to reach out to our internal audit group so that they can help support you and your department through that process. And last, I hope everyone has seen the help desk or the booth the help desk has out in the hallway, but I just wanted to highlight them. They're a resource for financial system questions and training. And really, the help desk is a great place to start because they're the experts at knowing who to route your question to. So they will make sure that your question gets to the most appropriate person. And I put their email and phone number up there. They also help us to manage all the, at least all of the finance LMS trainings that we have. And if you're not already signed up for their listserv, I encourage you to do that. That's where we send a lot of messages about changes or things that are coming soon, fiscal close notifications. So now I'm gonna turn it over to Mike Keener, who is the Associate Director of Accounts Payable and Banking Card Services.
That's me up there.
Take it away. You want this fancy thing or do you want that one?
Nice.
Working? Yes, good. All right. Oh, we don't get the, is that the deal here? We don't get the slides?
No.
I'll stand out here. Hello, everybody. I am Mike Keener. I run our accounts payable, our travel accounting systems for the campus, and all of our card services, so our P cards, travel cards, and virtual card programs for UC Davis. Quick little bit about me. I've been here about 11 years now as a professional person with a whole lot of years as an undergraduate, and hopefully no one ever looks up how many it was. Yeah, as I said, those are the things that I'm responsible for down there on the bottom. So today, what I was asked to talk to you about was a few areas of kind of controls, best practices, and some principles behind accounts payable on our campus. And then a little bit of the travel accounting side, our Aggie travel system, get into some of the reporting that you can do there, and some of the things to watch out for and do right and do better. This is not a long presentation. I know we're moving along quickly at a good clip. Do not feel like you have to wait for me to pause to ask a question. There tends to be a lot of interest in some of the travel rules and accounts payable systems. So jump in if you have anything. All right, to start off with, so AP invoicing. First of all of our purchase order invoices on our campus now should be processed by AP, not by our campus departments. This has been a shift over the last about 2 years now. For the last 15 some odd years, we've been considered what we call a decentralized campus for invoicing. So departments would initiate their requisitions. They would either get it directly approved if it was a low value, or it'd go through contracting services. And then the vendor would send the department the invoice, and they would enter it into the financial system. That has now changed. We want all of our invoices to come to one central office, my office, and we do the data entry right now into Kuali. So some things to think about with that, some of the big shifts that we've had is that we've had a long culture on our campus, wrongly, of ordering goods or services from our suppliers and not giving them a valid UC Davis purchase order number, but giving them a made-up number, or a number from a pre-purchasing system, or a number that was written down on your desk, or some other number. Because the department would get the invoice, they could make the PO later. After they got the invoice, they could get the PO number. That's got to end. We've been doing a lot to end that in the last couple of years. We're getting a lot better. But we have got to get away from this concept of what's called confirming orders. So we need to make sure when we're buying goods or services, we actually have a PO before we buy it. Then when I get the invoice and my team tries to enter it, they are able to enter it, and we can actually pay our invoices on time. Traditionally, our campus processes invoices at about 45 days from when we get it from the supplier. Most suppliers are still on net 30 terms, which means most of our invoices are late. We have shoved that down to about 30 days because a lot of our invoices are still coming to the departments first. So we're trying to get our suppliers to send them to us. A lot of them still come to us from departments with the PO number handwritten by the department on the invoice. So we know there's still a lot of issues around confirming orders. So please work on that. So invoices must have a valid open PO number on it. Open being a key thing. Fiscal year end's a tricky time for us because our departments like to close all the POs at the end of the fiscal year and reissue new ones coming after that. But then we get an invoice in August for something from July or June, and it references the old PO number. So that practice is fine. We just need to make sure that we are really communicating with our suppliers and providing them the current POs that we should be billing against. We have a dedicated email box just for invoices. This is a little bit tricky because it is just and only for invoices, nothing else. Not for statements, not for questions, not for inquiries, not for how-tos. It is just to submit invoices. And so any emails going to that email box, there's going to be a processor trying to key in an invoice into Kuali. They are not going to be responding to questions on that email box. We have another email, which we'll look at the end, called AP Help. That's where all questions should go. And generally, make sure your PO is accurate and reflects what you really bought. We have a surprising number of invoices that don't match with the POs. Either the items that are being purchased, or the quantities, or the amounts being paid. So these are things that slow down the invoicing process, where we have to go back, we have to update the POs to add more money, We have to go back to the vendor and find out why they're billing us for something that wasn't on the PO. Spoiler alert, the answer is the department called me and added something to the order. So make sure your PO is accurate in Kuali. All right, one of the main changes we have made over the last couple of years is implementing a concept of two-way matching. So most people are familiar with what's kind of the old school way of called three-way matching, where we have a purchase order, an invoice, and a receipt. Those are the three things. And the idea is that all three of those have to match before we will pay the supplier for whatever that was. Best practices in most of the accounts payable world today is that two-way matching is very fine, sufficient, low risk for low dollar transactions. And so that's what we are doing here. And we actually were the last campus to adopt this in the entire UC system. And we are still well below the thresholds that the other UC campuses use for this. So right now, anything under $1,000 that is entered does not require receiving and does not require a fiscal officer approval for the payment to go out to the supplier. It doesn't mean the fiscal officer shouldn't look at it. They get an FYI. They have their ledger reviews. They know what expenses are hitting their accounts. It just means that we aren't asking for an explicit approval before we pay the supplier because it's probably fine. We probably are getting the goods or services. It's low risk. Even if we missed one or two of them, we're going to get a credit back or a refund from the supplier. So yes, we do pay invoices without proof of receipt in Kuali. Very clear about that. It is below a threshold. It doesn't also mean that if we have a grant or another external fund, state money, that requires, by their own bylaws, requires receiving to be kept at the department level, that's still kept. Packing slips may still be a requirement of your grants. Proof of receipt may still be a requirement. We have systems that can help track that. Kuali actually will allow entering the receiving, even if it's not required for the payment. So that's still something you can take advantage of. And no, for the myth, this is not resulting in hundreds of payments for goods that were never received. In fact, in about 3 years since this practice has been piloted and gone into the norm, I believe we've only had about 3 instances that we've been contacted of payments where we never got the goods, and they've all been resolved with the supplier. So there's a reason everyone does this. It cuts down on our administrative costs, it gets payments to the suppliers faster, and it's very low risk. All right, so the best way to improve our invoicing process, a little bit of a tricky one, is to not have an invoice at all. So this is just a quick plug. Please try to take advantage of Aggie Buy or our P-card programs because it eliminates the entire process of invoicing. We don't need a PO, we don't need an invoice, we don't need to key things in, we don't need to wait for all the payments to get processed and approved. It all flows right through those systems. So please try to take advantage of that whenever you can. In this coming year, we'll probably try to get a little more aggressive about responding back to the departments who are still creating POs for goods or services that are available in Aggie Buy. And similarly, if you don't have a P card and you're buying a bunch of things that are available on P cards or allowed, we're going to ask you to start taking advantage of that program. All right, so some of our tax and payment terms, a couple of things around AP that get tricky. So to start, sales and use tax, always a problem. A lot of people on our campus get confused by these concepts. They are essentially the same thing. They're both the money that we owe to the state for goods, material goods purchased and used in California. The problem is, when things get tricky, is we don't always know if the supplier is going to charge us the sales tax or we are going to have to pay it to the state. So our purchase order is the first place where we get to set that up on our requisition. And for those of you who have ever seen one, there's a little thing at the top that says use tax indicator, and you can turn it on or off. And that drives all the way through to the invoice. It drives whether or not we are expecting to pay the supplier for the sales tax, or we are just charging the department and accruing it and letting our campus tax office remit the money to California. Either way, we have to pay the tax man. So the problem that we're running into is that a lot of our POs are traditionally not getting set up correctly. People are putting it in as use tax, but the suppliers actually collect it, or vice versa. Or they get down to the commodity codes and they're picking commodity codes that are not taxable, but they actually are taxable things they're buying. So we really want to try to get that accurate because as we adopt electronic invoicing, where the data is no longer being manually keyed in by a person, but being fed in through our systems, we're going to be relying on the PO to know exactly what to pay against. So if that PO is set up incorrectly and the supplier wants the sales tax, it's going to break the import job. And we have to go back and figure out why is the PO wrong, and again, it delays everything. So we want to try to get that right. The only real difference to remember is that sales tax goes to the supplier, use tax, we take it and we give it to the state ourselves. But in both cases, your departments have to get charged for sales tax if it's due. All right, shifting gears to payment terms. We traditionally have not made a big deal on our campus centrally and strategically around what payment terms we accept from our suppliers. We have allowed our suppliers to dictate to us what the payment terms are. And what normally happens is a supplier just says, well, I want to get paid in 30 days. And everybody says, okay, 30 days. Our campus and the UC system at large are getting much more strategic and a little bit more aggressive about what we want to do and how we want to pay our suppliers, not how they want to get paid. We are leaving a lot of money on the table for both our campus departments and our central offices and for the budget office and the whole campus by not taking advantage of early payment discounts or being able to pay by a credit card or even in some cases an ACH program that has discounts. So these are things that we're really going to be trying to push in the next 6 to 12 months, is getting a communications out to everybody, including these kinds of groups, around what our strategy should be and how we should address that when we're talking to our suppliers. We should not be passive. We should not just let our suppliers tell us. We should be addressing it and asking for what we want. And the short version is that we are going to try to push a lot more payment by credit card, and that doesn't mean P-card. So a lot of our PO invoices today are already paid by credit card and is transparent to everybody here. We just don't write them a check. We send them what's called a link to a virtual card payment. So the supplier gets an email, they're able to open it up, they click on the link, and they get a one-time credit card number that pays the invoice they just sent us. So this is a really great program. They get their money immediately, and we get incentive back to the central offices and to the whole campus that's able to use for other programs. What else we got on there? Generally, we're going to be trying to reduce and as much as possible eliminate the use of paper checks. Paper checks are very expensive. There are kind of industry metrics that say somewhere between $20 to $40 per check overall total cost when you're talking about the consumables, the time, the staff, the mailing, the lost checks, the dealing with stale checks, the reissuing checks. Checks are a nightmare. So we'd like to get rid of that. And one of the ways to do that is to, again, tell the suppliers, if you want a paper check and you're unwilling to do credit card and you're unwilling to do an ACH program and give us discounts, we're not going to pay you in 30 days. We're going to pay you in 60 or 75 days on a paper check because that costs us a lot. Why would we give you your money free when it still costs us? Questions on all that? All the way in the back. Yes, great. So the question was, do we have talking points or guidelines for how the departments can help be proactive in addressing the terms and getting better benefits for the UC? Yes. So we've developed some of them. We're continuing to develop them now. And as I mentioned, this will sort of be a big push in this next fiscal year out of the supply chain group with communications to campus and communications to our suppliers about how best to take advantage of these things. And certainly talking points, specific language we'll put into bids, little scripts that people can have when they're talking to a vendor and they're saying, hey, what's it going to cost for my widget? Oh, and by the way, do you accept credit card? Will you accept ACH? Please tell me which one of these you'll take. And so, yes. Yes, please stop using your P-cards for Amazon. No, No, it's a great point. And it's not just Amazon. So we do have, I think we're I don't know the number off the top of my head, but I think we're in almost about 40 or so catalogs in Aggie Buy now. And we still do see a significant amount of transactions both on the P card and through KFS for goods and services that are available in Aggie Buy. So that is another area which we are going to be going after, running more metrics, trying to figure out what departments are still using our legacy tools to buy from suppliers that we are available in Aggie Buy, find out why, and give some talking points to try to stem that. Right behind you first. So yes, question or concern, I guess, about the delivery times with the Amazon through the Aggie Buy program. I'm probably not the best person to answer that or address that concern, but I can bring that back to my colleagues within supply chain. Yeah. Yeah, so the question here is departments are unable to get their discounts from a supplier who are in Aggie Buy if they use Aggie Buy. So the best case there is you should be reaching out to our strategic sourcing team, and we can connect. And I don't have it up in my deck here because it wasn't on that, but they're responsible for managing that vendor relationship with those suppliers. And if that's happening, that needs to go back to their leadership at the supplier's end, because part of being an Aggie Buy is the suppliers are not supposed to be doing side deals outside of our catalog pricing. Our catalog pricing should be the best pricing available to UC Davis, not because one sales rep out in the field wants to get his quota up, so he's going to cut the price for a couple PIs. We need to watch out for that stuff. So yeah. All right. So monitoring payments. We do have a help desk for accounts payable. There are a couple people staffed on it now. It's AP Help. And a lot of the questions that we get, both from campus and our suppliers, is, where's my payment? I sent the invoice in. It hasn't been paid yet. Why haven't you paid me? Where's my money? Give me the money. So we answer a lot of those questions. But what we are also trying to do is to get people to start being able to answer those questions themselves. And that's where decision support is our best friend. We have DS401. It is our basic payment credit lookup report. Little snapshot of the results right there. It allows you to search by payment dates, charts, accounts, the orgs, payees, PO numbers, amounts, all that jazz. And it dumps back for you a list of all the payments made. It's not perfect. We want to get feedback from people using it about ways we can enhance it. We are doing a lot of enhancements to several of our DS reports within supply chain to try to make them a little bit more user-friendly and maybe a little closer to 2009, 2010, because I think they were built 15 years ago. But this is one which we have updated when we started bringing all the invoices in-house. So we started including all statuses of the payment requests. So you can see things that are en route. You can see things canceled. So you can see the whole history of payments for a particular supplier, PO, account, and whatnot over a time range. So the question of, is this paid yet? This is the place to go look first. Then would be to reach out. So I know the PO, I plugged the PO in here, there are no payments. And I know the invoice got sent in. Now is a good time to reach out. Hey, all right, like I checked, it's not paid yet. It's not on here at all. It hasn't been processed. Where is it? We would love to answer that question for you. We don't like to answer all the questions for things that are already on this report. So when possible, try to leverage this. And again, as I said, it's not perfect, and DS has bugs, it has issues, it has lots of room for improvement. So don't ever feel like you are limited to what you see on that search screen for a lot of our DS reports. If you don't ask to add a feature, it will never get added. But if you do, it might get added. Great. So the question is, what's the turnaround time, at least right now, with, and I'll kind of address all invoicing. So our invoicing paths right now, we actually have several paths available for the suppliers. Our holy grail is what we call Transcepta. It's a third-party service that we pay for that is a portal allowing our suppliers to upload their invoice data, and then we can electronically import it into Kuali. So we do not have to do a manual data entry of those invoices. There are very few suppliers leveraging that today. We're at about 10 suppliers, and we don't get a whole lot of invoices through it, but we are trying to really scale that up very soon. We've only launched it about 6 months ago, and we've been trying to work out a lot of kinks between the data being fed in and what's in Kuali, and back to the invoicing slide, trying to match it with the PO, and that's where a lot of the failures are occurring. The turnaround time on those is effectively real time. There's no intervention. They feed in from the supplier, and then within half an hour, they're in Kuali. And if they're under 1,000, they're done. And if they're over 1,000, they're pending a fiscal officer approval. So that's where we're going with a lot of our invoicing. Where we are today is that most invoices are manually entered by my team. And our turnaround time from when we receive the invoice on average is about a day to 3 days, depending on spikes in workload. One second, let me just kind of wrap that part up. That's if everything's working great. And everything usually is working great. Well more than 90% of all of our invoices go through lickety-split, no problem. There are several key problems that crop up with invoices. The PO is closed, number one problem, or invalid. Number two problem is that the remit to address is not in our system, or that the items on the invoice are not on the PO. So those things are all about getting the data right before we send the PO out the door. And when there are problems, those can then delay the turnaround time to another probably week or so for the most part, because a lot of that is going back to the supplier, confirming what was going on, going back to the department. We do our best right now to get the invoice back to the person who knows how to solve it as quickly as possible, rather than us sitting on it and trying to solve the problem. Not everybody likes that strategy, but we've found for the most part that that has been the most widely accepted way. The department would rather have it back if something's missing on the PO than having us trying to email around finding the right person to figure out the problem. No. Yeah, so the question was, how do we deal with the discrepancies between tax that's charged by the supplier and what we think the tax should be on our end? So tax has two flavors of problems for us at UC Davis, and we're exclusive for one of those. So the most common problem is that we are buying something from a supplier that does not realize that we have a different tax rate than the city of Davis. And that is an absolute nightmare. I wish we could change that. A few times in the last 10 years, I've floated the idea of giving us a different postal code. That doesn't seem to go anywhere. Apparently that's very hard, but we are one of the only places in California that has the postal code has two tax rates. It is very unusual, and no suppliers can figure this out. It's just super complicated. So anything delivered to our campus core is at 7.25, 7.5, whatever the state rate is today. Anything delivered to 95618 or any off-campus location on A Street gets the city tax. So that's the number one problem. And that has just been mostly in education with our suppliers. It's difficult to get over. Sometimes they simply can't do it because their AR system does not have the capability of billing two tax rates for the same postal code. So that's challenge one. The second challenge is our research tax exemption that we have, where we have a reduced tax rate for research purchases. And this is frankly a challenge all the UCs are having with our suppliers. It's really a case-by-case situation. The gist of that is that we only have to pay about roughly 4% tax rate for high-valued goods that qualify for a research tax break in California. As you can imagine, suppliers don't quite get their hands around that. So even though we tell them, we send them the paperwork, they spit out their invoice at 7.5. So those are case by case, and those do require our team generally to do an exception process with the supplier or the department to verify what should be done. All right, hop over here. So the question is, I think the question was who should do receiving? No, it is not us. We don't know that you got the goods or services, so we certainly aren't the receiving office of record. It is typically the requester that would, in one of many ways, certify that they received the goods or services. Many departments, it's simply an email from a grad student or the PI who got it and said, yeah, I got it. Sometimes it's an actual receiving entry in a pre-purchasing system, and sometimes it's an actual receiving entry in Kuali. But it's typically initiated in one manner or another by the person who actually bought the item, who got the thing. Does that answer your question? No, the question was, does AP tell you that you have to receive it? No. The Kuali system is already built in with the rules, so that if receiving is required to make the payment, that's fine. What happens is that the payment request document will route to the fiscal officer and cannot be approved by the fiscal officer until the receiving has been done in Kuali. And when they attempt to, they'll get a message saying there's not enough received quantity to process this. Yeah. Yeah, so that's only if receiving is required. If it's not required, then it's not holding anything up. Yeah. All right, we're going to shift on to travel. Any last AP questions? Some of them, yeah. No. Okay, so the question is sort of, there's an intent to move away from doing DV documents to a P card for utilities and maybe other payments. If you have questions about that, you can either reach out to me or you can reach out to, I think we have P card help is another mailbox that we have. But my contact will be at the end of this. Reach out to me if you have questions. We're happy to sit down and kind of discuss your needs with that. Look at how the P card can help your department, see what solutions we can need if you need one with a higher limit, if you have some dedicated suppliers that you want to buy from, so on and so forth. Utilities are, I would say, about 60, 70% a good hit. The other 30 to 40% don't take a credit card. So there are still some out there that will not accept credit cards. Certain utilities are great at it, some are not so great at it. AT&T absolutely will take a credit card. We're paying about $250,000 a month now to AT&T. Oh yeah. Well, our cell phones and our mobility net and the local landlines, yeah. Let's talk. So the question was about AT&T taking a credit card. They do. In the last few months, we've transitioned some major accounts to credit card. There are lots of ways to use credit cards. Not all of them are like the P card. There are other ways. Some of them require cards on file. Some of them require someone logging in monthly to a portal and putting the card in because maybe the supplier doesn't want to keep the card on file. A lot of different options. And yeah. And I could be standing incorrectly. So these companies are huge conglomerates too. So they may have subsidiaries that are being tricky, but we should get together and look at that. Anytime you've got opportunity, you think, hey, why are we writing checks to these guys? Like I know at home I pay with a credit card. Can't I pay with a credit card for that? We probably can. It might take a little finagling, but we should try and do that. And it cuts down on our DV documents. It cuts down on the POs. By the way, PO invoices for AT&T, PG&E, Ready Refresh, the water service, these are not good ideas. So if you are doing those today, especially things like Ready Refresh, we should talk. You can send me an email offline. We can get together. Those are strategies. We're trying to shift departments away from doing that and doing them on a P card and things like that. Good. Zoom, all these other little things that we've got. So. Yes. So probably a little bit off topic, but that's all right. I'll address it. And I'll look to Laura to tell me if we have anything behind me on the schedule. But and I should say I will be here tomorrow too. So if there's you have more thoughts over the night, come back. So the question was around Aggie Buy, and the what we have uncovered over the last couple months now is this systemic problem with some of our suppliers around invoicing through Aggie Buy in a timely manner. Amazon comes to mind as one of our current culprits, but they're all guilty for the most part. And so this has been an ongoing effort. I could probably spend an hour going into depth around what we've been doing over the last few months, but the short version is that we did uncover within supply chain, starting in late December, that there had been a large number of transactions conducted through Aggie Buy where the suppliers are failing to send us either any invoice or a matching invoice to the credit card charge that they ran, or a host of systemic issues or system issues that were preventing that data, even if they did send it, from getting to all the right places. The net result of all of that was that there's a big chunk of money over about a 2-year period that was not being accurately either charged or credited, in some cases, to department accounts. We have been aggressively working that over the last 2 months, and many of you, I'm sure, have received emails from us, either a big one just recently this week, or lots of individual JVs over the last month and a half to try to clean this whole problem up. We don't have all the problems solved. We've fixed a lot of the root issues, so we're going to hope that this is really a one-time problem, and that's sort of where we're at. The suppliers themselves have been, for the most part, responsive. They're slower than I'd like, but with enough pushing, they're getting us the data we need to reconcile this. There are a few suppliers that are still inexplicably not providing invoices in a timely manner. I know with Amazon, they've got some difficulties on their end that they've already been trying to address. They haven't fixed it yet. There are issues around back-ordered things and using the Amazon Marketplace where they have another supplier that they farm it out to, and then it's partially shipped, and they don't know when the heck to invoice, and so it's a work in progress. I hope we'll have better information, and it'll be mostly resolved in the coming month or two. So the question is around multi-year versus single-year purchase orders and whether or not there's a reason why necessarily we close purchase orders at the end of the fiscal year and make a new one the following fiscal year. There's probably a lot of people in this room that may have an opinion about that. I don't particularly. From a supply chain perspective, it doesn't matter if, in fact, it's a hamper to our process to close the PO and issue a new one. I might be guilty of just sort of assuming that there was a good fiscal reason why we were doing that to clear encumbrances and make new encumbrances the next year, and or everybody just kind of organically did their own thing and thought that was the best idea. But there is no reason in Kuali necessarily, from the supply chain perspective, why you can't have a 2 or 3 year PO out there. Does anyone else have an opinion on that wants to share better than me? Good question. All right, we'll move on to travel. All right, travel we could spend a long time on. This is just going to be a few slides on just a few things. I imagine you'll have some questions. It's okay. This is always a moving target. Travel at UC Davis is complicated. We have a very long, thick, accountable plan that we have to follow, our G28 policy. We have a whole other one that's equally big, that's our entertainment policy. And there's a lot of rules, and the systems, as much as we'd like to make them user-friendly and easy, are still a bit cumbersome for the layperson to get in and understand how to do things. So with that said, Aggie Travel is our key system. This is a system that we are continuing to grow and evolve. It does our travel expense reporting. It does our entertainment expense reporting. It does our travel booking, which is something we added a couple years ago when we went to our new version. We have recently added the ability to do our professional expense reimbursements in Aggie Travel. We are looking, by the way, at converting our P-card reconciliation to be done in Aggie Travel as well and out of Kuali. Just kind of throw that little teaser out there. This is something that is probably at a minimum 6 to 9 months down the road if we're able to do it. But the gist of that is this would be done almost solely to save time at the department level. Every swipe of the P-card today requires a document in Kuali, which requires an attachment, which requires a fiscal officer approval. You may have noticed when you've done an expense report in Aggie Travel, there could be 13 travel card expenses on one report. No reason we can't have a weekly or monthly P-card report for each P-card, where you put all the expenses for that week on there. They can snapshot their receipts out in the field using their phones, integrate right in there, and you can have one report you're reviewing and approving at the end of the week or the end of the month, depending on the volume, rather than our fiscal officers, 63% of all of you, being responsible for approving every single swipe of the cards. All right, so the other things that we're doing on there in Aggie Travel is our travel card and our CTS program. And we'll talk a little more about CTS. That's our direct billing for airfare and for our local lodging for when we have guests come near campus, and now for our dining services for catering. But first, let's talk about professional expenses. So this is the most recent thing that we added to Aggie Travel. And frankly, in an effort to simplify everybody's life, we may have inadvertently confused a lot of people. I apologize. Professional expenses is the best word that we could come up with at the time to address reimbursements to employees for things that they bought with their own money that they shouldn't have bought with their own money. So this is things that are not travel related and not entertainment related. They're the stapler for their desk. I paid the window washer guy because he was here. I had the $40. Can I get it back? The copy machine repair guy. The books that they picked up for their class because they just wanted to get them today. They knew what they had to get. They were at Borders. They picked them up. These are all things that we have systems, we have processes, we have policy for how we're supposed to buy those things. And we routinely, and we're not alone in the UC system, have a large number of these occur on our campus where people don't want to follow the rules, they don't want to wait, they don't want to get express approval, whatever the reason is, they whipped out their own credit card and their own cash and they bought the item. And now they want to get paid back. We're at the scale right now of about 1,000 a month that we do at UC Davis. It's a little high compared to some of the other UCs, but some of them are equally as bad as we are. And there are also almost always very low value. So there isn't really a big push or will from the top to say, hey, let's fix this. Let's stop our employees from doing this. Let's not pay them back anymore. Let's make them follow it. We'd love if everybody followed our systems, used a P card, used Aggie Buy. They don't all do it, and we aren't in the business right now of being punitive to them. Our old system in Kuali, in a lot of ways, was kind of punitive. So we moved this into Aggie Travel with really the intent of not making this such a hassle. We're going to do it. We wish we didn't. It's going to happen. Let's do it in here so that all of our employee payments can happen in one system. We're not dealing with two different systems to do payments to our employees. Now, what that means is that they've got a list now of a bunch of expense types that they can pick from that are things like laboratory supplies, office supplies, all those things. There's a special report for the whole thing. They should not be using their travel card for these things. That hasn't changed. There's no change in what the rules are on the travel card. Because they're being reported in Aggie Travel does not mean it's okay for people to whip out their travel card like it was a P card and buy whatever they want. All right, moving on. Most common mistakes on travel reports are incorrect trip dates. Very common. I can't tell you how many times I see reports that have a big audit flag and it comes to me for exception approval for meals on a same-day trip, and it's not a same-day trip. It's a 4-day trip. They just didn't put the dates on the header. So that's a very common one. Thinking our meal limits, thinking or hoping perhaps that our meal limits don't include tip or alcohol. They absolutely include tip, alcohol, service fees, the bartender, all that stuff. What's not included in our meal limits are almost exclusively the rentals. So if you are renting a table or you are buying a vase to put the flowers in, that's not part of the meal. But that, like I said, that bartender, the server, the tips, the gratuity, the tax, the service fee, all of that is part of our limits. We have to return a lot of reports where people try to break that out. Or they don't break it out, but that's their explanation or their excuse. Oh, well, it's the tips. That's why I'm over the policy limit. No, that's not an explanation. So try to remember that. Yes? So the question is, well, I'm not quite sure what the question was, but I think it was, can we fix something to make that easier? Yes. So we actually just on Monday, I was looking at trying to fix that. The question around is if you itemize a meal and you put in alcohol and then you put in the meal, like under 10 people and then you add alcohol, it is not right now adding those two together to figure out if you're over the limit. Systematically, it's not doing it. So our processors have to do it manually, and then you get these hopefully nice emails from Linda Berg or one of my people explaining that you actually did go over the limit, it just didn't tell you. I am hoping we can fix that. I think what we may end up having to do is create a couple more expense types rather than have you itemize those, but actually break them out and then it can group them. So we're going to play around with that a bit, try and fix that. I feel like I don't have to repeat that because everyone laughed. So what are the real life consequences of using your card inappropriately, P card, travel card, or both, and over an extended period? So short period, none, frankly. There are not. It's a reminder, a slap on the wrist, you need to ask for an exception, here's your exception. Long term, we often will look to department representatives to ask us if they want to take or have us do anything more drastic than that. So our kind of role is to point out to the appropriate people that something is being done inappropriately or they're not following the best practices. It is not necessarily our job to yank the plug on them. We will on certain cases. So if there is, explicit misuse on the P card, we'll pull the plug after a couple of those. But on the travel card, if they use the travel card for a professional expense or they use their P card inadvertently for a travel expense, vice versa, for the most part, we're providing warnings. We're not going to enforce anything until someone like an MSO or a CAO or assistant dean comes to us and says, this person's got to stop. Can you take their card away? Yep, you got it. Yeah. So the question was, can you? Well, it's a little bit of a trick question, so I'll get to that in a second, though. So if you're out at a conference and you buy a professional expense, can you include that expense on your travel expense report? So the reason that's a trick question is that, in all likelihood, what they purchased while at the conference was not a professional expense; it was travel related. So if they needed a charger for their laptop, that is a travel expense if they're on travel status. Now, if it really wasn't, if they really just were on a trip and then they got on Amazon and purchased a desk lamp for back at the office, no. They do have to do two separate reports. They cannot include a professional expense, one of our expense types that we've set up professional expenses, on a travel report. So are there limits for professional expenses? No, nor were there ever. So reimbursements done through our quality system that were over $500 to an employee required, again, some kind of punitive jumping through hoops, known as our confirming order and getting your VC to sign off on it or your dean and da-da-da-da-da. Some of those we're still requiring over 500. It's just that it's in a different system. So we still need to get their approval. It's a little easier to get their approval. You can ad hoc route the report. You can attach an email from them. You can do other things. But we are still looking for that for things over 500. But there were not and there are not limits on what we will reimburse to an employee today in any of our systems. There never were. It's just that it's very rare for our reimbursements to exceed about $1,000. Almost all of them are under a couple hundred. So a question about membership being reconciled in Aggie Travel, membership payments, and kind of the timing and the travel card usage and so on and so forth. So memberships is the one exception to they shouldn't use their travel card. We actually encourage people to use their travel card to pay for their professional membership fees, their dues, because it puts a lot of accountability on them rather than us on a P card to make sure they get the approvals before we'll pay it. So we kind of like that concept that they have a tool to pay for it. They can get reimbursed on the travel card, but we're not going to pay that travel card off for them until they get their approvals in our system. And our approvals do require that two things. They have to name the person who is the dean, associate dean, or vice chancellor who is approving the membership on the expense entry. There's a field for it. And that person who was named, their approval has to be in the routing or attached as part of the backup to that report. And we are checking for that. No. So the question was, do the professional expenses, and thank you for bringing that up, and I apologize for not opening with that. The hospital, and I'm talking exclusively the hospital, not School of Medicine, the hospital is not using this to reimburse their employees. So hospital folks, not for you. But they are using Aggie Travel for everything else, just not professional expenses. Yeah, if you're asking me, or I'm not sure if you're asking her. Yeah, in all cases, it depends on what it is that's purchased, right? So the comment was that if they're buying a book while on travel, that should be reported as a professional expense because you wouldn't want the book to go on the ledger as a travel expense. Depends on the book. An atlas very well could be a travel expense. We do have people driving all over California buying maps. So it depends on the book. It depends on why they bought it. So again, like your charger that you're buying, if you're at a conference and I need to get the projector adapter and I have to run down to Best Buy down in LA when I'm projecting and find the adapter and plug in, that's a travel expense. That's part of the costs of me doing the conference. It's not an office supply that you have to book. So they're also tend to be pretty small dollars. All right, the limits down there at the bottom. So just a reminder, everybody, traveling domestically, meaning within the 48 states, not including Alaska, not including Hawaii, $62 a day. You only get it if you are spending the night. You do not get it for day trips, which is a bummer for many of us who run down to Santa Barbara or San Diego or LA for a meeting. You don't get any meals paid for by the UC. There are very, very rare exceptions to that. But for almost always, if you are not spending the night, you do not get money for meals. The $62 is the maximum. You only report the actuals that you spent. For foreign, we have per diem, and foreign, for some reason, includes Alaska and Hawaii. So we have per diem tables. That's all available online. You get the per diems. You should not, and your travelers should not have the expectation that if the per diem in London is $224 a night for food, that you just get $224 every day. That's not the way the UC works. The expectation is that they can claim their actual expenses up to $224, and because it's foreign and it's per diem, we're not going to require a receipt. So you can take that how you want. What routinely happens is people claim $224, but sometimes they include receipts, and then we return it. We say, absolutely not. Your meal's right here. It costs you $100. You can get $100. So just try to remember that concept. In both places, domestically and foreign, the UC does not pay people per diems. We pay up to two different kinds of limits. We pay up to $62 anywhere in the domestic 48 states, and we pay up to the per diem limit of wherever you're going elsewhere, but only your reported actuals. One is no longer called a per diem. Now I think it's called foreign meals. Several months ago, I think, we changed the expense type to help eliminate that confusion and perception that people could get a per diem. So the comment here was that I should mention about departments having their own more restrictive policies. So a couple caveats there. One, departments tend to have some more restrictive policies. Two, they're not necessarily supposed to. So more restrictive policies are actually only at the role of the chancellor to dictate down to our campus from the UC policy, the UC system-wide policy. We're not in the business of enforcing departments and preventing them from having their own rules, but whenever anyone asks us, we will dictate our campus policies to a traveler as the only thing they really have to do. And if a department's telling them to do something else, we tend to encourage the department to stop doing that because there are usually really good reasons why that's our campus policy. So, but again, not my job to get in there and make you not do it, but. So for anyone to hear that, I think it's a concern about the department feeling like they have to police, I guess I would say the ethical reporting of travel expenses by their travelers. Yep. Like I say, I think we do, I think we have an obligation, at all levels of leadership, both from the department all the way up, to have some amount of policing and making sure that our people are conducting UC business in an ethical and prudent way and using our resources appropriately. There are avenues available to departments that are unable to manage that themselves. We have a compliance office. We have a whistleblower's office. We have internal audit or advisory services now. They are not shy, by the way, of looking into individuals that people think are misusing UC funds. So, yeah, Lori, why don't you? It does have language around saying that if you feel a traveler is abusing that, you do have the right to start asking for those receipts from them. Yes, that's exactly right. I think it's inappropriate to penalize everybody if there is somebody who you already suspect as being unethical in the use of our funds. And I obviously can't comment on that scenario. I mean, it sounds like maybe the MSO might have been right. But, well, I'm always happy to be a resource for the people in this room and anyone on our campus to clarify the policy. And I do often get questions from departments around, is it appropriate for me to push back on this? And I will be very candid in my responses back to whether or not it is or isn't. I mean, oftentimes it is. We really, I think, want to empower our campus departments to take a more active role in monitoring these things and having a voice. So had they reached out to me at the time, I absolutely would have just written right back with a policy reference that says, nope. If you think that they are, reporting the maximum over and over again and you want to see the receipts, you are absolutely allowed to. You sure? Yeah. That's an easy one, the department, always. So every expense that comes to my office, we expect that your department approver and your fiscal officer have already looked at it. So when we want to send it back, we're not telling one person they're wrong, we're telling 3 people they're wrong. And we don't want to be telling one person they're wrong and the other 2 people being like, well, I didn't think that was my job to look at that. No. And that's fine. That's fine. We're happy to play that role on occasion. I know that is necessary sometimes politically and interacting with people. And I appreciate that. So yes, our policy is policy, and we should do our best to follow it. Some of those concepts in policy are not as strictly followed as others. We do not go out and police people on the most economical way to get there. We don't police people on the most economical airline to pick or some other things. But some of them about driving versus flying, there actually are sections in policy that speak directly to that. So we can help with those. Last couple of things here. I put the entertainment meal limits on there for you. One area that gets a lot of confusion on our campus is refreshments. So it's this fourth category of meal. The intent with refreshments is that is the only thing you're doing. So if you are doing drinks or a cheese platter and then dinner right after that, it's all dinner. It's not two separate meals. So try to remember that one. And again, unfortunately, like the meals while you're traveling, it includes the tip, it includes the service, it includes the alcohol. And another tricky thing here, I'll kind of say this for all of our stuff on travel and entertainment. We, frankly, from the central travel office, we don't care where the money came from. It doesn't matter to us. We always have to follow our UC policies. So if we have a donor who gives us money and says, I want you to travel first class, I'm giving you the money. Don't worry about it. I'll pay the UC back for all of your travelers. Go ahead and do the steak dinner. I'm paying you back. We don't care. If the money goes through the UC, you have to follow our policies. Even if the person giving you the money, the grant, the whatnot, says you can do whatever you want. You can bring your spouse. You can have the dinner. You can do it. No, you can't if you're a UC employee. So with that little preface, that comes up a lot with entertainment when I see the exception requests that come through. Often it's, the donor gave us all the money for this and they want to do it. Well, I don't care. That's our limit. All right, and then the last thing, business class. This is one area where we are a bit more relaxed than some of our other sister campuses. Business class and first class is business class and first class. It is nothing else. So I can't tell you how many exception requests I get for business class airfare when it's not business class airfare. It's priority boarding. It's comfort plus. It's economy really nice. It's super really nice economy. It's not cattle class. It's whatever you want to call it. If it doesn't say business or it doesn't say first, it's not business or first class. That's going to work for now until the airlines screw us over and change all their stuff in a couple years. But right now, that's the rule, followed with we should always be economical and prudent with the UC money. So don't go crazy, but you don't need to ask for an exception for Comfort Plus. You do, unfortunately, still have to ask for an exception for Southwest Business Select because they put the word business in there. So we're stuck with that one. Questions? All right, reporting. No, that's already. Oh yeah, look, we'll use the mobile app. That was my idea here. Please use the mobile app. It is an amazing tool that we have. We pay a ton of money for Concur Expense, which is the platform for Aggie Travel. One of the big selling points is that you can do almost all your work on the mobile app. Most importantly, all your travelers can take pictures of their receipts on the mobile app. They do not have to bring in piles of receipts into the office. They can do it while they're on the road. They can eliminate all the excuses for the lost receipts. Take advantage of it. You can approve reports in the bathroom. It's great. So if you have confusions on that, our website has instructions. There's great one-pagers on how to get the mobile app up and running. It is not quite as super easy, intuitive to start it up as I thought it would be. It's like one extra step. So please take that one extra step and get on the mobile app. All right, travel reporting. A couple of these were already touched by Courtney, and I want to reinforce them again because they are super important. DS-418 and DS-421 are the two reports in decision support that you must be looking at on a regular basis to monitor your department's unreconciled travel card and CTS transactions. Really, really, really important. Failure to do this has cost this UC a lot of money in the last couple of years. We don't want to have to go through that again. We want our departments to be looking at this and going to their people and saying, what the heck, why are you not reconciling this expense? Get it on a report, let someone approve it. Travel card expenses are mostly on the traveler until they are approved. Then we pay US Bank for them, and everything's great. CTS expenses have already been charged to you. You already paid it. I don't think anyone in this room wants to have a $2,000 or $3,000 or $4,000 expense on an account that you have no idea what it's for. So find out what it's for. If it's on this DS 421 report, tell them to reconcile it so you know what it is. And then you can get it on the right account. And that's all I have to say on that. So check these all the time. The other ones that are useful, 419 is a great report for looking at all of the expense reports for a traveler or for a department over a time period. We are adding some enhancements to that to let you more easily see reports with personal expenses so that we can start honing in on people who might be doing a little bit too much usage of the travel card for their own stuff. So we're going to add some things there. And then 417 down at the bottom is for cash advances. We don't do a lot of cash advances for our employees. That's where we push them to use the travel card to pay for things or even get cash out on the travel card. So most of our cash advances for our employee group ends up being mostly like study abroad, big groups that are doing things, or our guests. But we want you to keep an eye on your guests too. So if we're giving money to contractors or we're giving them in advance, students fall into that bucket. We don't make students have a travel card. So if they get in advance to go on a trip, make sure they're reconciling it. And if they are reconciling it and there's money left over, we got to get it back. It does and it should. In fact, it should even show it before it's completely issued with some statuses. So reach out to me with that example and we'll try to figure out where that one went. So the question is there a way for you to see people's reports who have kind of gone through your approval chain but maybe got sent back? Not super easy. Generally, and it might not be really feasible, is being a delegate for them. Lets you go in and see what they're seeing. We can poke around some more and see if we can come up with some solutions for you. So she's saying she's as you're set up as sort of a delegate for notifications, but it's still difficult for them to go in and actually see the report in Aggie Travel to provide guidance to the person. Yeah. I'll put some thought into it for you. Okay, moving on. And I think this is our last slide. So look at that. Pay attention to those. Check them all the time. Key thing about this, you can set these reports up and the 401, you can set them up to do scheduled runs. So you go into DS, say do your org, your home department code on the 421 and schedule it to run every week and just shoot you an email of everything. All right, last slide for me. Tax rules. Tax. So we have started taxing late expense reports at UC Davis. We are not the first UC to do this. Hopefully we won't be the last. And what we are doing, we started this actually last year with expense reports that were submitted a year late, which seems kind of crazy that there'd be reports being submitted a year late, but there were many. Now we have done it, so we're aligned with the IRS rules. So starting January 1st, any reports submitted 60 days late will be reported as taxable income to the traveler. So what does that mean? First of all, what does it mean to be late? We are using the originally submitted date on the report compared with the end date on the report header, or the event end date, whichever one it was, trip or event end date. We take the difference. If that's bigger than 60, it goes on the tax report. So what this means is that we don't care how many times it gets returned for correction. We don't care if the department or my office takes 2 months to approve the report. That doesn't matter. What matters is the date that they clicked submit the first time versus the date they put on there as the end of the trip. If that's bigger than 60, it's taxable. So a couple examples there, end date March 15th, submitted on April 15th, approved June, so it was approved about 4 months late, not taxable because they submitted it 1 month after the end date. The next example, they submitted it in June. Well, now we're about 75 days past the end date. Even though it got approved the next day, doesn't matter, still taxable. And then the last one here, look, return for correction. So they submitted it on time, we returned it, they resubmit it after 70 days, we don't care, not taxable. So if it is taxable, which I hope it isn't, and I really hope we start getting better at this, but we are hitting about too many, I think 350 some odd reports last month of people that were taxed. If it is taxable, it's everything. So it's not just the money they take out of their pocket and spend on their trip. It's anything direct billed to the UC, it's anything paid on the travel card, and it's anything out of their pocket. It's all the expenses related to the trip or the event. And then coming in July, there's some areas that we are not currently taxing that we're going to be reviewing. Business entertainment expenses. So right now, we haven't made a big fuss about it, but those are not being taxed. We are not going after people who are the coordinators of business events, like whoever paid dining for today's wonderful lunch will not be taxed if that report is submitted 60 days late. There's good reasons for that. Some of our people that do this are doing $120,000 conferences. They don't make $120,000. We logistically cannot tax them for it. So we have to take a look at how else to approach these. Professional expenses are not being taxed today, only because we didn't tell anyone they would be. So expect those to start getting taxed when we get closer into the next fiscal year. And then non-employee expenses just raises a whole other confusing thing because that would require 1099s, and we do not capture Social Security or tax reporting information of our guests for travel today. So, logistically troublesome. Actually, it's not. So the tax reporting office, so let me preface this by saying that when I say we are taxing, it's actually not me. I'm not the one doing this. What's that? Yeah, and I will. The office reporting the taxes is our tax reporting and compliance office. So I am just the bearer of bad news to them, and then they have to manage the taxes. They have published an FAQ that speaks to a lot of these things around the tax and what the rules are and what's allowed. The question over here was, well, I think the comment that leads to a question is that she had a doctor who was late, got the email from the tax office saying, hey, that expense report's going to get taxed, asked for an exception, and was granted one. The first thing on the FAQ, I think, speaks to the exception process and is very clear that it is a one-timer, one time only, that you get your free pass, Get to Pass Go, collect $200. They are recording those. They're keeping track of who's getting them. And the next time they ask, the answer will be no. So the two big reasons people are asking for exceptions is, I didn't know. Number one, I didn't know. Or, oh, I did all this. I gave it to my delegate on time. Not my fault. It's their fault. One time, you get out of jail free for either of those two excuses. After that, it's on you. You are responsible as a traveler for getting your expense report submitted in 60 days. Not your delegate, not your shared service center, not I didn't know, but you get one free one. Hope that answers that. Yeah. I think it's within that next pay cycle. So I think it's on the FAQ, the timing. I would anticipate, I don't know exactly off the top of my head, but it's 30 days probably that you want to do it. So I think what they're doing is they're doing it 1 month behind where we reported February transactions at the beginning of March to the tax office. They're reviewing all of those, pulling out, the entertainment and the professional expenses, and then they are email notifying everyone who is still on the list, and then probably giving them at that time the time period for when they can ask for an exception. And I think that what they're doing is they're saying, if we don't hear from you, it's going on your March pay, or April pay, excuse me. Oh, am I wrapping up? All right. All the way in the back. It's reported as taxable income. No, we're not sending them a bill. Yeah, it'll result on your pay stub and eventually on your W-2. Scanning for hands, no? And that is about that. So boom, there you go. Questions, AP help, travel help. Those are your best two resources to go to initially. Things that we've talked about that I asked you to reach out to me, that's me. Feel free to send me an email. You can call. I'm often to places like this, so email is always better if you can. And thank you very much.